and bring on board Rahul Sharma to talk more about the markets and where do we see in terms of what is he sees in terms of the direction for the markets as well. Rahul, thank you so much and good afternoon for joining in with us on ET Now. Let's firstly talk about Nifty, yes, managing to hold on to those 20,000 levels in the last couple of trading sessions. But do you think, if we sustain this, we could see a better up move going forward, or maybe, it'll just fall past this level as of now?
Yeah, very good afternoon. So November expiry, November series has been dominated by bulls so far, and the way we saw it happening in the October expiry, we saw expiry happening at a throwaway level of 18,850 odd. I think something similar is happening today on the way up. That is the only difference, and it calls for a strong case of profit booking at these levels. So my suggestion would be maybe 2,222 gets taken out, a new Nifty high, maybe 1 or 2 days here and there. But it is advisable to book profits in the F&O positions, which are leverage positions. The structural trend of the Nifty is intact. The up move is still intact. So investments can continue is what we are advising our clients. But from a leverage perspective, it calls for a profit booking around the 20,100 to 20,200 mark. Secondly, if we do see a round of dip that happens, which is what we are expecting to happen post today's expiry, yes, a lot of it depends on how the rollover would be, what kind of positioning that the institutional participants have. So probably we'll have more clarity once today's expiry is done. But as far as the long view that we've shared on your channel in the previous week also, we strongly advise to take some profits off the table, take some money off the table, and wait for it possibly around the 18,800 mark, which is around 300 points from here. If that happens, that will be ideal re-entry point from where one can expect Nifty to inch towards the 20,400 and above mark in the month of December. So net, we are expecting markets to get into 2020 mode. We've been slightly sluggish, except the last 2 or 3 trading sessions. November, we have been a bit sluggish. I think the momentum should come back, in the month of December, which is why we expect the markets to do well. The pain point of the market so far has been the banking index. Apart from banking and Reliance, maybe everything else has been participating in this up move, at least in the last 2.5 days of trading action that we've seen. These two pockets have sort of, taken off, and we're expecting these to add on to the upside for the Nifty. So, it's a right mix. We had an underperformance with respect to US markets. We had the short positioning of FIs. If you remember, we had record long-short ratio short for FIs at the beginning of this series, November series, and that is correcting as we speak.
Right.
So this calls for a strong case of a further short covering, which should take us to a new all-time high.
Wow, short covering, all-time new high, December seeing more flows and momentum. That's good to hear. And finally, Reliance and banking system performing again. But Rahul, specifically on a few counters, BHEL, GAIL and India Cements. All of these 3 stocks are firing away. What would be your recommendation on these?
Yeah, I would start with GAIL, Gas Authority of India, because the way this stock has been, it is in a very strong sector, which is public sector enterprises. Secondly, there is a long-term breakout that has happened above the 130 mark. It did that a few weeks back. Post that, it saw a small dip, and now it is back above the 130 mark, and on the back of strong cash volumes. So structurally, this is this move has got long legs in GAIL. We are expecting this stock to test anywhere from 175 to 200 in the next 1 year's time frame. In fact, we also have it as our Diwali pick as well. So from a slightly medium to long-term perspective, we are very bullish on GAIL. One can stay invested in this, maybe have a stop loss at 115 and a possible 200 over the next 12 months time frame is what we are looking at it technically. Speaking of BHEL, GAIL, this stock has actually played its part in this up move. I would rather be taking profits at 175 odd and not look to re-enter. Probably after a dip or so, we can look to re-enter around the 150, 155 mark. But at these levels, clearly, it is advisable to book profits and maybe shift to GAIL, which looks relatively better.
Right. And Rahul, what are your top picks as of now?
Yeah, so from the capital goods space, we like L&T. This stock has been subdued for many days now. I think the time is right for the stock to give a fresh breakout, can head towards the 250, 3,300 mark as well. So my sense is one can look to buy L&T at these levels. There is a very strong base formed around the 30,030 mark. So have a stop loss placed at 30,030, and one can look to go along in this one. And apart from that, NTPC is another one which we like a lot. Again, same sector, public sector enterprises. Overall, power stocks have been doing well, and this stock could be very well be headed towards a triple century. So one can look to buy at these levels. Have a stop loss placed at 250, and 275, 280 is what we expect in the short term. And if you hold it longer, I think there is very much possibility of a 300 as well.
Okay, so those were the top recommendations. Coming in on that note, Rahul, we let you go. Appreciate you making time speaking with us.